Hello, I'd like to welcome everybody to this update webinar with Fiore Gold. My name is Jacob Willoughby. I'm a Vice President of Research here at Red Cloud Securities. Joining me today is Tim Warman, CEO of Fiore Gold, who I'll introduce in just a moment. We'll begin today's webinar with a presentation from Tim. They'll provide an overview of the company and also update us on their projects. After that, we can take questions from the participants. So please go ahead and type in questions at any time. They'll come up and we'll be able to get to as many of them as we can in the time allotted. Before we begin, we have to cover disclosures. So for Fiore Gold, there may be some forward-looking statements made on this webinar, and I would direct participants to the cautionary note on page 2 of Fiore's corporate presentation located on the company's website. For Red Cloud Securities, please see the full disclaimer and disclosures on our most recent Fiore research on our website. And I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Red Cloud specific disclosures related to Fiore Gold are as follows. In the last 12 months preceding the date of issuance of our report, Red Cloud has performed investment banking services and has been retained under a service or advisory agreement by the issuer. And in the last 12 months, a partner, director, or officer of Red Cloud Securities or the analyst involved in the preparation of the research report has received compensation for investment banking services from the issuer. With that said, we can now invite Tim to begin his presentation on Fiore Gold.
Thanks, Jake. So, Fiore Gold. For those of you who aren't familiar with us, we are a U.S.-based gold producer with one producing mine and a development asset next door that's permitted and getting ready to be moved towards production. I'll just move through our. There we go. Forward-looking statements and disclosure. You can read that at your leisure on our website. So, 3 basic assets. The Pan mine in Nevada. We've ramped up gold production there from 34,000 ounces in our fiscal 2018 to we're guiding somewhere between 45 and 48,000 ounces in fiscal year 2020. Just a note that our fiscal year begins in October, so we're well into that fiscal year. So 45 to 48,000 ounces with a newly installed crushing circuit. With Pan as a nice cash flowing base for operations, we're turning our attention now to our Gold Rock property. Gold Rock is right next door. This is what really drives organic production growth. Federal permitting is complete on that, and we'll have a PEA, the first PEA ever out on that project in Q1 of this year, really outlining how we're going to produce, what the production profiles are going to be, what the kind of CapEx and OpEx costs are going to be, and particularly highlighting a lot of the synergies with the adjacent Pan mine. As I mentioned, they're only about 8 miles apart. On top of that, we really see a pathway to growth to that kind of magic 150,000 ounce mark, which is our first initial target, through both organic growth with Gold Rock and through some strategic M&A, trying to roll up or consolidate some of the other single asset gold producers, some of the smaller single asset gold producers that are out there to make a larger company with multiple assets. Our assets are primarily in the Western US. We have a single exploration asset called Rio Loa down in Chile. That's sort of left over from a previous incarnation of the company. We're hoping to have some news on finding a home for that project, and really that will bring us back exclusively to the US. The first asset, the Pan mine, this is our production base and our cash flow generator. Pan is a standard open pit heap leach Carlin style mine in Nevada. You can see a picture of it there with our blast hole rigs drilling. From the air, Pan is relatively straightforward. There are 2 pits, the north pit and the south pit. There's a central leach pad area where we bring the ore from the 2 pits, and then an ADR plant where we treat the gold bearing solution and produce gold doré on site for sale. The secret to the Pan mine is blending ore from the north and south pit For the first 2 years of operation, we did that strictly as a run-of-mine operation. So we would blast ore, put it in trucks, and truck it straight to the leach pad, dump it at whatever size fraction came out from the blast, and leach it. We knew that we could get better recoveries by adding a crushing circuit. So in the early part of last year, we put in that crushing circuit. It was operational in July. We had a few challenges getting it up and running the way we wanted to, but it's running beautifully now. And we're starting to see those increased recoveries that we expected to get from crushing. We guided that we'd get somewhere between 6,000 and 7,000 additional ounces a year. And it looks like we're on track for that this year. That's about all I can tell you about Pan. It's just a very simple operation that generates some pretty good cash flow. In terms of the numbers, you can see there on the graph on the left, increasing cash flow from 34,000 ounces in 2018 to our guided 45 to 48,000 ounces in the current year, again, as that crusher starts to kick in. All-in sustaining costs, we'll see a slight spike this year because of increased stripping, higher exploration expenditure, and the costs associated with getting that crusher started up. But those increased stripping rates start to decrease in about May of this year, and we'll see those drop down to lower than life of mine. Pan is a relatively low strip ratio mine to begin with. It has an average strip ratio of about 1.6 to 1 life of mine, but currently we're in about a 2 to 1 strip ratio, and so as we work through that, the costs will start to come down again this year, but still generating nice cash margins, from operations this year. So with Pan running smoothly and generating cash to grow the company, the focus of Pan really now is on expanding the mine life and extending the reserve and resources there so that we can make sure that Pan continues to generate cash flow for the company for the foreseeable future. You can see on the current slide there, the North Pit and South Pit from an overhead view. And all of those red zones that you see on there are drilling targets that were identified by the previous operator of Pan, but have never been drill tested for the most part. And so our plan is, over the last year or so, we've been drilling primarily in and around the existing pits, going for that low-hanging fruit, looking to add to the resource and reserve life in the very near future. But as we start to get a handle on what's in and around the existing pits, we're going to step out and start drilling some of those more distal targets to get a better idea of what the longer-term upside is for Pan. And I'm pretty convinced that Pan is going to be, it'll never have more probably than a 6 or 7 year mine life at its max. But I'm hoping that 10 years from now, it'll still be going with a 6 or 7 year mine life. There's lots of room here to drill out lots of really interesting looking targets. That area you see there outlined in black, that's the concession area just for the subco that holds the Pan property. That's part of a larger 200 square kilometer property that you'll see in some of the subsequent slides. It's actually one of the largest land positions with a junior in Nevada. So with Pan running smoothly and generating cash flow, we're starting to focus more on Gold Rock, which is our organic growth project. Gold Rock is about 8 kilometers away. It's the host to, or the home of a former small open pit mine from the late 1980s, back when gold was at $300 an ounce. And really what that little open pit there does is it just gives us a nice 3D view of the existing ore body. There's a nice slide that shows the full land package, the full 200 square kilometer land package at both Pan and Gold Rock. You can see Highway 50, the main east-west highway through this part of Nevada, just to the north of us. And the interesting thing is that Gold Rock, where you see that red zone there on the Gold Rock project, that is the current resource area, the current area where we've defined a resource. But the actual trend of the host rocks and the alteration and the structure that controls the geology and controls the mineralization and the deposit at Gold Rock, that extends for about 16 kilometers from one end of that long claim block to another. We've only defined resources in about 2 or 3 kilometers of that. And the geology there is very interesting because as you continue north of Highway 50, you get into Kinross's Bald Mountain project, and the new Vantage complex at Bald Mountain. The geology there is almost identical to the geology that hosts the mineralization at Gold Rock, and that's one of the reasons why Kinross Gold came in as a strategic investor when we first picked up these assets. And Kinross currently holds just under 6%, and they really liked it for the exploration potential at Gold Rock. Gold Rock is interesting to us too because it's about 60% higher grade than Pan. It'll have a slightly higher strip ratio as well. And it's also federally permitted. We finished the EIS and got the federal record of decision in September 2018. And that puts us probably 5 years ahead of any similar project in Nevada that's still in or is beginning the permitting process, because permitting does take a long time, even in a mining-friendly place like Nevada. And one of the other interesting things about Gold Rock is that when the previous operators began the permitting process, they did it strictly on in-house studies. So there's never been an economic assessment done at Gold Rock. And so we are currently wrapping up a PEA, and it'll be the first ever PEA on Gold Rock. And we'll have those numbers out hopefully before PDAC to show, what kind of production profile and how that's going to contribute to the growth with Fiore's gold production overall. We're confident that this is going to get us over 100,000 ounces a year with it and Pan running together as we go forward. So Gold Rock, the development plan, you can see a little more close-up view here. You can see how close it is. The distance between Pan and Gold Rock is about 8 miles in a straight line. And we see Gold Rock operating really as a bit of a satellite deposit to the existing Pan mine. You'll have the same management team. We'll use a lot of processes, a lot of existing infrastructure. The ADR plant we'll use there, the assay laboratory, the refinery, the carbon handling circuit. We'll tie on to the existing power line at Pan. You can see that yellow line coming in from the left-hand side of the picture. That's the existing power line at Pan. Runs within about 4 miles of the front door of Gold Rock, so we'll have a nice short connection there. The black line joining the two areas is the permitted access road. We're hoping to start building that this spring. That'll be a few $100,000. And that will reduce the travel time between the two areas from about 90 minutes at present to about 20 minutes once that road's in and open. So lots of CapEx and OpEx synergies between the two deposits. Again, they'll be very similar. They'll be open pit mines. We're looking at a couple of different process streams as part of the PEA for Gold Rock to take advantage of that higher grade. And again, we'll have that out, and lots of exploration potential upside at Gold Rock. Currently, the global resource is about 400,000 ounces there, and we're hoping to expand that. And there's lots of potential to do that along strike and on some parallel trends as well. The third project, the third asset that's within Fiore Gold is called Golden Eagle. That's a really interesting project up in Washington State, just outside the town of Republic, which is a historic mining district in northeastern Washington, just south of the Canadian border. Kinross's Buckhorn and Kettle River mines were the last mines operating in the area. They're just currently on care and maintenance. They closed down about a year ago. Currently, Golden Eagle hosts a historical resource of about 1.7 million ounces at 1.8 grams per ton. That resource was done back in 2009 by Snowden, a major engineering company, using a $750 gold price. We are going to redo that resource estimate, bring it up to date so that it doesn't have to be considered a historical resource. We'll be working on that over the next month or two and hope to have that out shortly thereafter. And really using more current gold prices to show what the potential of that is. The biggest issue at Golden Eagle is that if you were to do a pit-constrained resource on there, and we've done that in-house, you see that green shell there around the resource itself. That edges of that would have to extend on the ground that's controlled by Hecla, and they have ground to the north and south of us. They are currently working on a resource of their own just to the south of this, a few hundred meters. They've told us they have something in the range of 1.5 million ounces there, defined as an internal resource. And what we've been talking with them about is trying to unitize this ground, or at least get a layback agreement to allow us to access this particular ore body here. But I think the most logical thing to do would be to combine that ground with Hecla, and we've been talking with Hecla for some time about that. And I think we're starting to get some traction on that. So stay tuned for some news coming up on the Golden Eagle project. From a capital structure, we have a very straightforward, clean capital structure. We have just under 100 million shares outstanding. There are 32 million options and warrants. About 20 million of those are warrants priced at $1.60. Those warrants expire later this year, I believe in September. And once those fall away, we'll just be left with the 10 million options. About a third of the options are in the money. The rest are out of the money. So fully diluted with those options and warrants, we're at about 129 million once the warrants drop away in September. that will obviously drop as well. Very strong cash position, US 7.3 million at our last reported quarter, which was December 31st of last year. $23 million in working capital. We have no debt at a corporate level, and a market cap of roughly $50 million Canadian. Analyst coverage from Stephen Sook at Stifel GMP, Stuart McDougall at Mackey Research, and of course Jacob Willoughby at Red Cloud. So key catalysts coming up. We try to underpromise and overperform. And I think we've done what we said we were going to do over the last sort of 2 years. We said we'd get the Pan mine successfully ramped up and generating cash flow, and we've done that. We've extended the mine life into 2023 with greater than 50% growth in inferred resources there, and we're currently drilling at Pan to continue to extend that resource and reserve life and extend the mine life well into the future. Gold Rock, we said we'd get that permitted, and we've done that. We said we'd get a crushing system installed at Pan and up and running to increase recoveries, and we've done that successfully. So the upcoming catalyst then, obviously Gold Rock PEA is going to be the near-term one in Q1 of 2020. We'll have results from Pan resource drilling. We'll have a new reserve and resource update and a life of mine plan sometime mid-year. And then hopefully we can get some traction on consolidation, putting together some of these smaller 50 to 70,000 ounce gold producers, single asset producers, to create a much larger multi-asset producer and get rid of some of the single asset and small producer discounts. And really, I think we can expect a fairly significant re-rate if we can accomplish that. And of course, we'll also be looking to unlock some value in our Golden Eagle and our Chilean projects this year. I think, if you look at our the current state of the company, we generate cash, we fund our own growth, we fund drilling at Pan, we funded the PEA, and really we're able to do all this because of the strong operational team generating cash flow at Pan. We haven't had to go back to the market and dilute our shareholders in 2.5 years since we started operating the asset, and not only have we done that in a very operationally effective way, but we've also done it in a very safe way. We haven't had a single lost time injury at our operations in about 4 years. So basically never in the company's history. And I think we'll just leave it at that. There's a nice shot of the Pan mine looking north.
Great, thank you, Tim.
Thanks, Jacob.
So we can start in on some of the questions. I'll start with the first one is asking about Kinross, and do you think that they are a potential acquirer of the company now that you've substantially de-risked Pan?
Yeah, I think Pan on its own is probably a little small for Kinross. They looked at these assets when they were for sale, when we actually bought them. I think they like the exploration potential over at Gold Rock, and really that's why they invested in us. And I think, if as we continue to grow Gold Rock, as we continue to drill there over the coming year or so, it's always possible. I mean, obviously they know the area, they're well established in Nevada, and there are a lot of other companies as well. But I think looking at a growing producer that's got the potential to get over 100,000 ounces within the next sort of 1 to 2 years, I think it's a pretty attractive target. But at the moment, we're focused on our own operations and our own growth.
Sure. Another question mentioning that there is no corporate debt, but asking if there's any closure liabilities or bond for the Pan mine.
Yeah, so like every asset in the U.S., you've got a closure liability. The total closure liability, and that's calculated using a formula that the government sets out. It's a kind of standard formula, and that formula really assumes that the government is going to have to step in at the end of the day and do the cleanup. So the costs and the costs in those calculations tend to be a lot higher. But the current liability is about $15 million. We've funded about $6 million of that as a cash collateral bond, so that's as restricted cash. And because we've been able to extend the mine life, and because we've got a strong balance sheet, our bondholder has not required us to contribute additional capital over the last year or so, and we're hoping that state of affairs can go, keep going on as long as we can continue to show extended mine life. So,
excellent. Now, another question is asking about your cash position, which is pretty healthy considering the market cap of the company at about 10 million Canadian. And just asking if there's any ways that you could use that cash to expand production out of Pan.
Yeah, so expanding production at Pan is possible. The mine is currently operating at about 14,000 tons of ore a day. It's permitted to go as high as 17,000 tons a day. But I think what we want to do is do a bit more drilling there to extend the mine life out before we look at ramping up production much more at Pan. I think the primary focus with the cash we're generating there is really developing Gold Rock and pushing it towards production, because I think that's where we can really add a real step change to the production profile. We're kind of estimating that production out of Gold Rock could be in that sort of 50 to 75,000 ounce range. So if you combine that with sort of 45 to 50,000 ounces out of Gold Rock, you're organically getting up over 100,000 ounces, and so I think that's really the focus at the moment.
Right. Which follows on very nicely to another question about Gold Rock, asking how you would look to finance development of that once a decision was made.
Yeah, so again, we haven't seen the results of the PEA yet in terms of capex, but we're sort of estimating that the capex for Gold Rock is going to be somewhere in the 50 to 75 million range. Obviously, although Pan generates some nice cash flow, it probably doesn't generate enough to completely fund the construction there. So we'd look to a typical sort of debt and equity mix once we get to that production decision and look to put financing in place. I will say that Fiore has probably better access to development capital than a lot of other companies that are just starting to put their first mine in place, because we've got an operational track record. We've got a cash flowing profitable asset already there 8 miles away at Pan. And so we probably have access to a broader range of finance providers, including some of the banks. We've actually had bank technical teams on site to start to get comfortable with the asset. And hopefully with more potential lenders there comes a lower cost of capital. But again, we'll have to see how things go going forward.
Okay, another question, and this one comes up, I imagine, fairly often for you. I've had it asked to me a few times, asking what interest Frank Giustra or his firm has in the company at this point. Yeah,
so I think this goes back to the start of the company when Fiore Gold was called Fiore Exploration and was really more of a Latin American explore-co. And Frank did originally put the company together, which is why it has the name that it has. That's kind of Frank's brand. But since we've kind of evolved into a small producer, Frank's really gone on to other things. I don't know that he and his group really have much of a shareholding anymore. They're certainly not involved in any way in kind of operating the business or advisory role or anything like that. So it's really more of a historical thing rather than anything current.
Right. Good question here, asking what is the permitting process like in Washington? If you were able to strike a reasonable arrangement with Hecla, maybe you could tell us a bit about that.
Yeah, so we're still at the early stages of looking at that. We haven't done really any work on Golden Eagle as we kind of, the main focus has really been trying to figure out how to unitize the land package up there. Washington State is obviously not going to be as easy to permit in or as quick to permit in as Nevada. There isn't that long history of mining there. Although in the part of Washington we're in, it is a historical mining district. There are a lot of old mines there. It's been producing up until quite recently with those Kinross mines. So, it will be a longer process, but I think it's definitely one that can be done. If people had said, they were going to permit mining projects in Idaho and Oregon a few years ago, you would have laughed at them. And I think projects are getting permitted there as well. So, and one of the advantages, of course, we have with Golden Eagle is that the entire holding cost for that project is about $10,000 a year. So there's no real pressure on us to rush that project. It's not a big burden on our treasury at all.
Yeah, that's a very low holding cost. That's great. Let's see here. There's somebody asking about your engineering needs for this year. I'm not sure if they're referring to the studies going on at Gold Rock, or
yeah.
But perhaps you could address that.
Yeah, I mean the main thing we're doing study-wise in terms of engineering studies right now is wrapping up the PEA at Gold Rock, and then the plan is to go straight into the work that will lead into a feasibility study for that. Because obviously, if we're going to do debt financing for this, we're going to need a full feasibility study, and I think that'll be a fairly straightforward operation. But what's really going to be needed there is quite a bit of drilling for metallurgical work, for firming up some of the resource, converting a lot of the inferred into M&I so we can bring it into reserves. And then of course the usual geotechnical drilling and condemnation drilling for the infrastructure, that sort of thing. So that's the main engineering focus for the coming year.
Okay. Good question here, asking about any hedges. The company previously had a small amount of hedging.
Yep. Yeah, so what we did about a year ago was we looked at what our capital spending requirements were going to be, particularly around putting the crusher in place. We ended up putting in about $1.5 million worth of our own capital into that, on top of the equipment finance lease that we took on to buy the equipment. And we wanted to make sure that in the event gold prices drop down again, and you'll remember a year ago, I think people probably weren't expecting it at $1,500, a year later. And we'd seen prices, in that kind of below 1,200 range quite recently. So we put a limited amount of collars in place just to guarantee that we'd have the capital to spend on that. We currently don't have any hedging in place. We don't have any collars in place. If we had a major capital spend coming up, we might consider doing a partial hedge again. But there's no plans for that in any near term.
Okay. Question on drilling for this year at Pan. You outlined some of the targets you have in the presentation. So I'm wondering if you could maybe talk to us about how much you're spending on drilling for resource definition and how much just on exploration there.
Yeah, so it'll be split about $1.5 million to $2 million on resource and reserve expansion drilling, and then probably in that sort of $400,000 to $500,000 range on some of these more distal targets. And then obviously if we find something interesting on some of those more distal targets, we might decide to throw a bit more money at that. But as a start, that's kind of where we're budgeting for this year.
Sure. This question asking if there are plans to do any deep holes at Pan.
Yeah, it's certainly something that our geological team is keen to do, and we may get to that this year. It's definitely there on our list of things to do. So yeah, there's some one of our geologists. She came from Barrick, and obviously they've had some big success with putting deeper holes in under some of the near surface mineralization and hitting some quite high grade stuff. So yeah, it's definitely something we want to do.
Right. Another question about Washington, actually. Someone asking, have you found the permitting process easier or quicker following the changes the BLM has made directed in Washington?
We haven't really started to dive into the permitting process in Washington, so I couldn't really say one way or another. In Nevada, initially some of the issues we had with permitting were just there was a lot of unfilled roles in the BLM, particularly at some of the sort of senior political levels. So sometimes, when a document needed to be signed, there was actually no one in that position to sign it. So. But yeah, we haven't been involved so much in the permitting process lately, except at the sort of state level permits, which are kind of daily operating permits and that kind of thing. So yeah, I couldn't really say, to be honest.
Sure. I had a question actually about in your presentation, you talked about blending the ores being one of the keys. I'm wondering if you could maybe expand on that a bit and give us a bit of color on exactly why that is and how you do it?
Yeah, so for those of you who know the history of the Pan mine, the company that built that mine actually went bankrupt shortly after starting it. They probably spent about $100 million building that mine back in 2013, 2014, and then quickly went bankrupt. And one of the reasons that happened was they were only mining from the south end of the deposit, what we call the South Pit now, because the ore from that area has a very good recoveries in lab tests, and looks like it doesn't really benefit from crushing. And so because they were doing run of mine operations, they weren't crushing rock. They thought that they would get better recoveries at a start, and their plan had been to pay for the crushing circuit that was originally envisaged out of cash flow. The problem is that south ore is very clay, and the previous operators ended up putting about 4 million tons of ore on the leach pad. And then when they started to irrigate it, they found that they had 4 million tons of clay on the leach pad. So we had to go in and we picked up the asset. And bear in mind, we picked up this $100 million asset for $5 million in cash. We had to go in and do a lot of work to rehabilitate that initial lift of ore that was put on there. We had to mine a lot of rocky ore from the north part of the deposit, blend it in with that clay-rich ore to give us the permeabilities to allow the leach solution to soak through and get gold out. And so since we've proceeded to stack new ore on, what we do is we blend the coarse rocky ore from the north part of the deposit with the clay-rich ore from the south part of the deposit, and that blending allows the permeability to stay, the strength to stay, and the solution to percolate. And we've had no problems at all since we restarted the mine back in 2017.
Right, that makes perfect sense. And for anybody participating who's not familiar with this type of a gold mine, it's a heap leach gold mine, so permeability is always extremely important, and clay not so permeable.
Yeah.
Okay. So you provided a little bit of an update on Golden Eagle, and I was glad to see that. So you're hoping maybe to get some sort of transaction done or agreement done perhaps this year even?
I'd like to see it done this year. Yeah. Obviously, there's another party involved, and they're a larger company, and big companies often don't move as quickly as smaller companies do. But we've had some good meetings with them, and I've been encouraged by some of the recent meetings that they seem a little more interested in getting something done in the near term.
Right. Clarification from an earlier question from somebody online saying that they were asking about the changes for permitting at the DC Washington level, and
right.
What impact has that had on, say, the EIS for Gold Rock?
Yeah, it really, we got the EIS approval in September 2018, so it's been in place, and it had been working through the process, if you look back, the previous owners actually started that permitting process back in 2010. So that was an 8-year permitting process. Some of that delay was due to the bankruptcy. The permitting sort of hung fire, I guess, there until we picked it up again and started moving it forward. So I guess a lot of the changes that had come in didn't really come in until just about the time we were really in the last stages. So we didn't see a huge change, but then we really only caught the tail end of of that with our permitting process. Now, I don't know if things are moving along for other projects in Nevada more quickly. I'd like to think they would be, but again, we finished the permitting process over a year ago, and so haven't really seen a lot of that effect.
Okay. Question about some of the recent drilling you announced late last year at North Pan, and just asking how thick you think those zones are and how close they are to surface.
Yeah, some of the stuff at Pan, I don't have the cross-section in front of me, but some of the stuff just to the west of the North Pit there comes to sort of within, 10 or 20 meters of surface, and has some quite thick intercepts there. So obviously, with the kind of grades we have at Pan, we really need to keep those stripping ratios under kind of 2 to 1 in order to really maximize the profitability of that ore. And so it was nice to see some long intercepts close to surface there. Obviously, we've got some more drilling to do there. We did some drilling before Christmas. We'll start that drilling up again. They should be actually mobbing the drill onto site this week. And so, but yeah, there was some encouraging intercepts there, and I'm thinking that we'll be able to, the goal is always kind of to replace about a year of production every year. And if we can do more than that, great. We'll extend the mine life beyond what we had. But even if we can just keep adding a year to a year and a half every year, we'll consider that a success.
Right. Follow-up question to that, asking when you might be able to get to mine some of that North Pan material that you had the drill results on.
Yeah, I mean, the goal with that near pit mining is to get it into the mine plan, as quickly as possible. We don't want to see that stuff out, 10 years from now. That doesn't really add a lot of value when you look at, kind of discount rates. But if you, we'll get a better idea of that towards mid-year when we do the resource update, we do the reserve update, and we do the life of mine plan. We'll see where that schedules into the mine plan.
Okay. Question asking about crushing, and just curious if finer crushing would potentially give better recoveries, or is that something you've already examined?
Yeah, when we first started assessing adding the crushing system to the project, we knew that finer crushing would give us even better recoveries. But we decided to be a bit cautious with this. Again, we didn't want to take on debt to do this, so we wanted to do it within our resources and the cash flow being generated by Pan. And we realized that the bulk of the additional recovery could be generated just by single stage crushing, which is what we put in to start with. And I think we're starting to see well, we're definitely seeing the benefits of that crushing now. There's always a bit of a lag with a heap leach because the stuff you put on the heap leach, it takes at least a month, if not several months, to see that gold actually appear at the bottom of the heap leach and go into production. But we're definitely seeing now with strong production in December and January. We might look at finer crushing going forward, but again, we wanted to confirm that we were going to get the results we thought we would from the single stage crush. We've certainly left room in the crushing circuit to very easily add a second stage crusher in there.
Okay, great. I think that covers all of our questions. Right. So that's a pretty good amount of time, and it's a great update. I'll remind everyone that they can access the research we have on Fiore at our website, which is, I think Josh is going to pull it up. So it's redcloud.fs.com/research-home/ You'll see the research portal when you go to the website. So it's not hard to find. And I'll just mention that next week we'll have another company called Blue Thunder Mining. This is a brand new company. It's supposed to begin its first trading, I believe, Wednesday. And I'll be speaking with actually Chad Williams, our chairman and founder at Red Cloud, who is one of the founders of Blue Thunder. So we're very excited about that. And then I'll just remind everyone that Red Cloud is hosting a pre-PDAC conference on February 28th in Toronto. And you can visit our website to get more information about that. You can see some of the companies who are going to be presenting and some of our speakers. Our keynote speaker this year is Robert Friedland. Can't believe I forgot his name for a second. So we're excited to have him. I know I've seen him present before as Tim. We were talking about it earlier, and he does a great job. So we're very excited for that. And with that, I'll sign off and thank Tim again for giving us the update, and thank everyone for participating.
Thanks, everyone.